How's it going out there, good people? Welcome back to the House of Business Podcast 2.0. This is your host, Caleb Thompson. I hope everyone's having a great morning out there today. Yeah, I had to record this podcast this morning for the simple fact that we were getting a lot of things put together for Thompson Square Gardens Management Company. So with that company and integrating all three of those different businesses under the Thompson Square Gardens Restaurant Company brand, it kind of pushed this back. But I'm here now. Here to give you guys this information that you guys so sorely need, so desperately. No, I'm just kidding. But I'm here to give you guys this particular episode, just so we can make sure that you guys get the information that you need. So once again, this is the House Business Podcast 2.0. This is your host, Caleb Thompson. We are out here live in New York City. Hope everyone's having a great day. And this is the place where we give you the knowledge and the tools to execute your dreams and your visions. Let me put this coffee down right now. Okay, so today we're going to discuss cash flow mistakes that kill good businesses. So cash flow mistakes that kill good businesses. But on our last episode, that we kind of discussed a lot of things that had to do kind of surrounding this topic. But I'm going to go a little bit more in depth into cash flow mistakes that kill good businesses. Like I said, so we are operating 17 companies out of New York City. Some of those companies are e-commerce companies. Some of them are brick and mortar. In totality, there's a total of 38 companies with our revenue. I don't want to put the numbers out there dealing with revenue, but things are good. So, but I want to help you guys understand there is two businesses or companies that I had acquired, which I built from the ground up, that I ended up losing within 2 weeks. So I want to kind of help you guys understand these cash flow mistakes that can kill a good business. The business was good. The market was good. The foundation of the company was good. Our target market strategy was on point. Our pricing strategy for our products was on point. We had already developed a business plan front to back. We already had investors. We already had everything set in place. The entire foundation on which the business stood was great. But I'm going to tell you how I lost those two companies in 2 weeks. Two companies in 2 weeks. And this is why. And I'll go a little bit more in depth. Somebody would say, "Wow, you lost two companies in 2 weeks." Yes, but I also gained eight more companies those following weeks. So let me help you guys. So number one, I'm going to give you 3 points here on how cash flow mistakes can kill good businesses. Number one, this is how I lost control of cash flow. I lost control of cash flow and paid the price. Okay, so I thought revenue meant stability, but I learned the hard way that money coming in doesn't mean money staying in. That doesn't mean the same thing. But I also underestimated timing. So when the bills were due versus when payments actually hit my account. So there's a difference between you could check your profit and loss statement, but this is going early off into the business. Sometimes you don't really anticipate all of the costs going into a business. You may anticipate, let's say, some operational costs. You may anticipate maybe some staff costs or payrolls, but there's a lot of other things that you do not anticipate going into a business. Sometimes I didn't anticipate what if something broke down, what if about commercial insurance, about certain things that I didn't. I was just thinking, man, let's get in here and let's make some money. But actually, in actuality, it actually cost me more not to anticipate hidden costs or anticipate certain costs dealing within and outside of the business than it did with me getting in there and just starting to generate revenue through our products and our services. So it actually cost me a lot more, but I ignored the early warning signs because I was focused on growth instead of liquidity. So liquidity is, if you do not know what liquidity is, it's basically, liquidity is do I have the money right now at this very moment to pay what I need to pay outside of what's outside of what we're generating, the revenue that we're generating at this current moment? Do you have some cash off the side? Is there some account or some cash somewhere that you can, if a bill just popped up or if some appliances broke down, do you have access to cash at that very moment? How much liquidity do you have in that particular company? So it's basically just, cash on hand, current ratio, your current assets plus your current liabilities. operating cash flow, cash reserves, things of that sort. Maybe take some of those retained earnings. Maybe those retained earnings can be used as liquidity. So number 2, the costly cash flow mistakes that I made that shut down the 2 companies that I had at that current moment. I reinvested too fast without protecting operating cash. So I reinvested too fast. So the one thing that I did when I first started to generate a lot of capital with these 2 companies, what I did was I took those retained earnings, or those earnings that we had on the side, and I started to reinvest into real estate. I started to reinvest into another company instead of pouring back into the company, and that ultimately caused my company to crash. Even though I gained another stream of revenue, it came at the costly mistake of not reinvesting back into the same company until it was strong enough to stand on its own. So I want to encourage you to do this. Do not invest in other business ventures until you have a strong foundation in your company. We also established other departments in that company so we can create our own fail-safe. So if one department did not execute or generate a large amount of capital that particular month, we will have another department that will start to generate capital to catch up with that. So. But that's one thing I did. So I reinvested too fast without protecting our operating cash. I mixed emotion with financial decisions instead of sticking to clear numbers. Your data is probably the number one tool, number one asset when it comes to business. Like I always say, man, check those cash flow statements, check those profit and loss statements each month. Sometimes you can have a profit and loss statement that you can have for each week. Maybe starting off, you may need to check your numbers every week or every 2 weeks to make sure that you're on top of that. But I didn't build enough reserves, and when the pressure hit, there was no margin for error. So I didn't build enough reserves. I took those profits and those earnings, the retained earnings that I had for that company, and I started to reinvest into other business ventures instead of pouring it back into the business. And that's how I ultimately lost those 2 companies. But from that mistake, like I said, 8 more companies was birthed from that mistake, from learning that mistake. But those companies were good companies, and we still had the documentation and the strategies we had for those particular products. So the foundation, we could build another company based off that same foundation and off of that data that we had. So we still have all those documents. We still have that strategy for that fitness supply company. We still have everything. So even though we lost that company, we can build another one and build it better now. With a new name, we can rebrand the same company and launch it all over again. So it's the same exact thing. It's the same exact foundation. We have the same exact marketing strategy that worked with us the first time. We have the same pricing strategy and target market strategy. So we have those same things that will be able to help us to build another company by using that same blueprint. So, you can build it. I could just take that same blueprint and build 40 different companies in 40 different places, and with the right staff and with the right leadership, it can blow up overnight. But like I said, you got to have that target market strategy, and it has to be tailored to those and also check the GDP of those areas that you want to launch those companies in. You want to make sure that you're in a place that they don't have that particular product or service available or on hand. At arm's length, so they can know there's something new there. Okay. Number 3, this is if you're just not tuning in, this is the House of Business Podcast 2.0. This is your host, Caleb Thompson, and we're coming live from New York City. This is the place where we give you the knowledge and the tools to execute your dreams and your visions. So this episode is called Cash Flow Mistakes That Kill Good Businesses, and I'm basically just giving you guys a rundown on how I lost 2 companies within 2 weeks and gained 8 companies those following weeks. But this is why. Number 1, I give you guys 3 talk points. Number 1 is how I lost control of cash flow and the price I paid. And I basically just discussed that I ignored early warning signs because I focused on growth instead of liquidity, reinvesting into other business ventures, taking those profits, going into real estate, going into tax lien, tax deed investing without reinvesting that capital or those profits back into the business to make the foundation of that business stronger. So that's how I lost that company. Number two, the costly cash flow mistakes I made that shut down the two companies. Like I said, I reinvested too fast without protecting operating cash, and I didn't build enough reserves. And when the pressure hit, it was no margin for error. We had no margin for error. Number three, what will I do differently? Now to protect and sustain a business, I track cash weekly, not monthly, so I always know my real position. I'm not out here just, the numbers. The numbers matter. I don't care what anyone says. If you want to sell a business, the numbers matter. If you want to create a structure for your business to be franchise ready, you still need numbers. You still need the numbers need to be available. You need to know the numbers of your business. When you are creating a pitch deck and you want to investor, you need to know those numbers. So the numbers is your number one asset. Knowing those numbers is your number one asset when it comes to any of your business ventures. So know your numbers of your company. I separate profit, operating expenses, and reserves to avoid confusion and overspending. So I separate those things. So you need to separate those things. It's kind of like, I always say that a business is like, you and your business is like a marriage. And everything that has to do inside of that business are your children, and you treat all your children differently, even though you love them the same. Your staff is one thing. Your let's say your operating expenses is one thing. Your reserves are one thing. Your profit, all those things. Your company culture, everything is birthed from you building that company. So you're married to your business. You guys are in a marriage. Everything else inside of that business is like your children. You have to treat them all separately and treat them with love, but treat them all separately. So I treat my operating expenses different than I treat my profits, but I love them both. I treat my company culture, the building and the structure of my company culture, I treat that different than I do, dealing with business partners. So everything within your business that is birthed from that business is like your children or your grandchildren, and you're married to that company. So treat it like that, man. Treat business partnerships like a marriage. Treat your business like a marriage, and learn how to balance your working life, your work and home life in the same sense. Okay, so anyways, I separate the profits, operating expenses, and reserves to avoid confusion and overspending. And I make decisions based off cash reality, not just vision, so my businesses can survive and scale. So those are the 3 talk points that we just went over, and these are cash flow mistakes that kill good businesses. So it's House of Business Podcast. We will meet you guys back here Saturday, 6 p.m. Eastern Standard Time, here live in New York City. It's your host, Caleb Thompson. This House of Business Podcast 2.0, the place where we give you the knowledge and the tools to execute your dreams and visions. Peace.